Welcome back, everybody. This is Kim with Excel Mortgage Brokers, and I just wanted to kind of reiterate a little bit on last week's video with first-time homebuyers. And I have a wonderful realtor here with me, Victoria.
Hello, my name is Victoria Armstrong. I am a real estate broker associate for eXp Realty, licensed here in Colorado as well as Alabama.
Awesome. Well, welcome.
Thank you.
So we just kind of wanted to go over a couple questions or things that she runs into, as well as that questions that I get asked when a first-time homebuyer comes up to the plate and is ready to buy a house. So Victoria, what kind of questions have you ran across?
You know, the major one is there's a lot of confusion between the pre-qualification and the pre-approval letter. So which one is needed in order for you to actually purchase a home?
The pre-approval letter is what's actually needed, and a lot of times these days especially, realtors won't even take you to go see a house without one, because first off, they want to know how much you are approved to purchase so that they're not sending you things that you can't afford to buy, because we all know what happens there.
True. And, you know, we don't want to give your hopes up or anything, but then, you know, sometimes in order to build that rapport and trust, what I do personally is I'll show you a home or two, but then after, it's up to yourself to determine whether or not you want to proceed. And then I personally would require that you have that pre-approval letter.
Right. And we start out, like, if you come to me before you come to a realtor, I would start out with a pre-qualification, which is the confusion between a lot of people. And that's just quick raw numbers I take over the phone, like what your income is, your debts that you pay monthly, what you think your credit score is, and then if you have a down payment budgeted in your account to purchase a new home. That kind of gets us rolling real quick, raw numbers right off the top, and then we kind of go from there. And if it looks good and it's in the range that you're looking for, then we would look at the application and the documents that I need to review in order to get that pre-approval letter over to Victoria.
So a lot of people are constantly asking, how long does the process take? And I know I've seen a lot of lenders be able to get your pre-approval done same day. Sometimes it could take a couple of business days. What's the turnaround for you?
I say 48 hours. A lot of times it's less than that. But the reason I say 48 hours is because a lot of times someone starts the application and or finishes the application itself, which, by the way, doesn't take more than 30 minutes. Like 15, you could probably have it done. And then they oftentimes send me a couple documents, but I don't have them all. And without the main staples, which is, you know, your pay stub, your W-2s, your driver's license. If you're self-employed, obviously pay stub and W-2 isn't relevant. It would be your tax return. And then your bank statement kind of showing where you have that down payment. So once I have all those pieces, it can be very quick for me to get a turnaround time for that pre-approval letter. But I often say 48 hours because of that reason.
Yeah, so definitely 48 hours. And ultimately, it's up to you. It's just contingent upon how soon you're able to provide that paperwork.
Right.
And I would suggest that you just have it up front so we can try to expedite the process, considering how quickly everything moves in the market.
Right. And I think another thing I'd like to say is that pre-approval letter from me lasts until you find a home, technically, unless you acquire more debt, your job status changes, so you either if you get a raise, great, but if you happen to change jobs where you're making less, that can come into play, and then that pre-approval letter would not suffice. But otherwise, I mean, if you get it today and you don't find a home for 3 months, that's still good. The only thing we would have to do is repull credit, because those are only good for 60 to 90 days. It's depending on the lender. So,
good.
Yeah. What other questions have you run across?
Well, what method of finance would get you to the closing table faster? What I've been seeing is, and what you may have been hearing about over the last few months, is cash offers. So definitely a cash offer would take precedence over you going through the refinance or the finance process. So could you elaborate on that a little bit?
Well, I know that that's been a pretty big deal lately because investors are coming in from all over the place. But I mean, cash offers definitely oftentimes win the bid. But we do have a delayed financing option as well. So if you make a cash offer and decide you can't do that cash offer, or you do that cash offer because you have the funding, but you want that money back or a portion of it because you really didn't want to spend all that money, we can do a delayed financing option for you. And that kind of comes into play as well with a one-time close deal, which I'll discuss in a later video, but it's the construction to perm all in one transaction. And you can do a delayed financing in that as well. So sometimes that's helpful for first-time home buyers, especially in this market. Does that help?
Yeah. Oh, that was very insightful. Another thing that we run into is, as a first-time home buyer, they say that you need 20%, and I believe that's 20% down for conventional. But then if you're looking for some sort of down payment assistance, you may be able to get approved for that, and then you could probably go down as low as 3.5% for a down payment, just depending on the program that's best for them, right?
So typically, first-time home buyers can get into a conventional for 3% down.
Oh, okay.
FHA is 3.5. 20% of course is going to keep you away from that mortgage insurance. So on a conventional, once you hit that 80% LTV or loan to value, you won't have mortgage insurance. So a lot of times that's why people want to do a 20% down. But 3% is all that's required. Down payment assistance program is definitely available. It's definitely an FHA program. But 3.5% is all that's required there, and it's not from you. So with the down payment assistance program, that 3.5% would be paid for by, we have 3 in-house lenders that have down payment assistance, and so they would cover that for you. There's a couple different programs, and I'm not going to get into all 3 of them now, but some of them cover closing costs, almost all closing costs on top of the down payment assistance or the down payment itself. Some of them only cover down payment and a tiny portion, if anything, of the closing costs. Some of them require the buyer to come up with $1,000, like CHAPA, for example. You have to have $1,000 out of your own pocket. You can get some other stuff gifted to you, but $1,000 has to come out of your own funds. And those funds have to be seasoned for 30 days. So you can't just say, Mom and Dad, give me $1,000 so I can put my own money down. It doesn't work that way. So it has to be in your own account for at least 30 days to season that, so it's your money. There's a lot of things I could go into with these down payment assistance programs, and we can do that in another video. But there are some great options for people out there who just don't have the financing and they want to get into a home and stop paying rent. So.
You know what? And another thing is, a lot of people don't realize the differences between going to an actual bank and going to a loan originator. From my experience and just what I've witnessed out there, it's best to go to a loan originator because they have so many varieties and options that's going to be tailored to your situation. So as you can see, she's very knowledgeable and she's able to guide you on which process would be best for you.
Right. Yeah, we have over 30 lenders we can shop. So rates are changing on a daily, hourly basis sometimes. And so whoever is the top of the list at that point in time when we potentially would lock your loan, that's who we would choose for you. Unless, of course, you're doing a down payment assistance and then we're stuck with whatever their rates are for the day. But that also kind of rolls into the credit issues, because I know a lot of first-time home buyers are like, well, I don't have good enough credit. I can't afford a home. And I always say the best thing to do is have us pull your credit, have us look and see where you exactly are, and then we have reports that we can pull to kind of see if we can bump that credit score up a little bit.
Right.
Sometimes it's as simple as opening a credit card if you don't have one, and utilizing it every month and paying that off every month to build that credit up. Sometimes it's your balance may be $6,000, and if you pay it down to $3,000, your credit score will go up. It's seriously that easy. So
one question that's frequently requested is, well, if they pull your credit, is that going to impact their credit? Is it going to be a soft or is it going to be a hard pull?
It's definitely a hard pull that we do, but when you're dealing with a credit pull from a mortgage company like ourselves, it doesn't affect your credit that much. 5 to 10 points max that I've ever seen. It's not like a credit card company or when you go buy an auto loan. Those take a pretty big chunk out of your credit. So that's another piece I'd like to quickly reiterate. Once you start the process of buying a house, please try not to go out and spend a bunch of money on your credit cards, and don't open up new card accounts, and don't go buy a car. Like, those are all going to affect your credit score. And then when they do a soft pull right before closing, you've now got more debt, which could affect your debt to income ratio, and now we don't have a loan, or it can affect your credit score itself. So that can all change throughout the process. So I try to reiterate to people, you've got a month. 30 days is about what it takes us to close, 45 on a down payment assistance program. But in those 30 days, just try your hardest to not go out and spend a bunch of money. I know it's hard because you're excited and you want to go buy new furniture and you want to, go get all this new stuff, but try to refrain from doing that. It's just super helpful.